It's a great day. I'm Diane Luongo-Gazik with Diversified Capital Funding. Thank you for joining me today. My guest here today is Jeff Perkins. We've already had him here visit before, but I thought it would be really important for him to share with us information about earthquake insurance. I don't know much about earthquake insurance, but I do know as a lender, we do not require earthquake insurance. But we obviously are in earthquake zone, and there's so many misconceptions about earthquake insurance that I thought Jeff can help clear us up.
Sure. Earthquakes, as you mentioned, earthquakes and landslides are not covered on your basic homeowner's insurance policy. That's covering fire, water damage, etc. So any type of situation where there's damage to the home is not going to be covered by the insurance required by the loan. So this is a separate insurance policy that home buyers have a number of ways of getting. Number one is through the company that offers their homeowner's insurance. There are a handful of companies that will also sell earthquake policies. They can go through the California Earthquake Authority, which is a California-run agency, or they can go through a third-party insurance company. Essentially what they're doing is protecting their equity in the home. Mm-hmm. People that don't have a lot of equity don't usually buy earthquake insurance because it is expensive, it does have a high deductible, and it isn't something that a lot of people get.
And I know kind of from personal experience, like the deductibles are quite high, usually what, 10
or 15%
okay.
Of
Wow.
the coverage. So if it, and this isn't market value of the home, this is the cost to rebuild. So a 2,000 square foot house might cost $400,000 to rebuild, but that homeowner is looking at a $60,000 deductible out of pocket on an earthquake insurance policy. So that's a deterrent alone. And for most people that say I'm going to pay $1,000 a year, and if something happens, number one, the damage has to be above $60,000 to pay out, and if it's a total loss, I have to pay 60 grand out of pocket.
Wow, that is pretty expensive. And then annually, how much are they?
Annually, I mean, they go anywhere from $300 to $2,500 a year. And that being said, we are in earthquake territory, and we do see earthquake claims on policies occasionally. They're not as frequent as fire claims or water claims or theft claims.
Now we talked about equity position for someone's home, somebody that has little equity versus somebody that has a lot of equity. And I just want to kind of clarify that. Equity would be the loan to the value of the home. So if you buy a home for $400,000, let's say, and let's say you have $20,000 or $40,000 worth of equity, so your loan would be $360,000, let's say. So that equity position, you would determine, does that equity position warrant the deductible of $60,000?
Right, that's something that each home buyer, each homeowner is going to have to consider. Is this a cost that is worth protecting? How much equity do they have? Is the cost of the earthquake insurance policy worth it? Something that everyone needs to sit down and talk about before they make a decision one way or the other.
Now, before we got on camera here, we were talking a little bit about the misconceptions. I guess I had misunderstandings of the fact that if a fire started due to an earthquake, or if a gas line broke due to an earthquake, my understanding was your fire insurance does not cover the fire damage.
It's not cut and dry.
Okay.
There are certain situations where there's concurrent losses going on, both from the earthquake and the fire, and if the earthquake insurance will cover the earthquake, your homeowner's insurance may come in and pick up that fire if there was a gas leak caused by an earthquake, even if you don't have earthquake insurance.
Okay, see, I always thought that if it was caused by the earthquake, no matter what the damage was, your regular homeowner's insurance policy wouldn't cover it. So you're saying basically it's not really cut and dry.
No, well, they don't want to cover it. They're going to do everything to not cover it. It's good to have the earthquake insurance policy there to have that extra protection, just in case your fire insurance company says, no, that was an earthquake loss.
I have found a lot of people aren't currently getting earthquake insurance, again, because of the cost, and many times because of the equity positions. In the last few years, equity positions of homes, people have lost their equity in their homes because of the economic conditions. But I think it could be a value, but I think we basically determine it's an individual basis, right, if somebody should or should not get it.
We're seeing probably 8 to 10% of homeowners, that's how little people are actually buying earthquake insurance policies. That,
wow.
There's probably more that should be buying it based on the equity in their home and the cost for their policy, but they just aren't exploring it. I think they have those preconceived ideas that, no, I don't want this, it's too expensive, well, it's worthwhile to look at an individual quote for them to see how much it would cost.
So if somebody wanted to find out if they should get earthquake insurance, how can they reach you?
They can give me a call on my cell phone, 714-912-4500, or send me an email, jeff@tustinninsurance.com.
It's very valuable to have somebody like Jeff, because Jeff is a broker, so he can get different quotes from different insurance companies. So very valuable guy. Thank you so much for coming out and sharing with me. I appreciate it. Thank you everybody for joining us today, and have an excellent day.